In this strategy building block episode, we're going to talk about the breakout and the takeout method for entering a trade, the MV3 trade away. So let's get right into it. All right. So in my live streams, you're usually, sometimes I mention taking a breakout trade or maybe taking a takeout trade. So in this video, I just want to give a little clarity on what I mean by that exactly, so that you're more aware of what I'm talking about. All right. So quite simply, we're just gonna go over what these two things are, and just to get just to give a understanding to what we're talking about here. There's some things that we're going to look for to understand if we want to take a breakout trade. All right, so that's just starting with the breakout trade. So with the breakout, and for this, we're only really going to talk about the entry part of the strategy. We're not necessarily going to talk about targets and stop losses. I'll briefly cover that towards the end of this video, but this is just a strategy building block, something that you can implement in what you're doing, and also, like I said before, to give some clarity. All right, so for the breakout, what we're going to be looking for, of course, is consolidation, all right, and our structure. Okay, so for our takeout, come on, I can spell. All right, so for the takeout method, what we're looking for is pull back into support or resistance, structure as well. All right, so the main thing that we're looking for is the main thing that we're trying to reference here to understand if we're going to take a breakout or a takeout for our entry is we're looking at structure. Okay, so what do I mean by structure? All right, so just looking at the chart here, the historical print of price, this, as we can see the candles here, all of this is structure. So we got consolidation there. If we look at this as a big picture, this is kind of we have some trend there, we got trend there. So this is our structure. So this is telling us that we're trading slightly bearish, but we also are trading down into support. But just looking at what the bigger picture is, we got a little bit of consolidation here. This is our structure. This is what we mean by structure. So this is going to tell us where it's likely for buyers and sellers to be sitting at, where their orders are likely to be sitting, right? So one quick way of looking at this, let me clear a little bit of this off of the screen. I don't want to clear everything. All right. So let's just take a look at this part right here. Okay. So if I'm looking at this live and I'm seeing this, and let's just imagine, let's use our imaginations that we are working on this little candle right there. So once we trade back down into this area here, once we see that we're getting, we got some sell-off there. We have sell-off here, got a red candle, and then immediately followed by that is a small green candle. Then we can kind of assume that we had buyers that came into the market there, right? Or maybe so buying can be new traders coming in and starting their position here, or it can be buying from anyone that shorted up here, right? We don't necessarily care what exactly is creating the buying. All we need to know is that there is buying happening here in terms of this particular situation. Of course, if we're trying to take a short, then we need selling, right? So we just need other traders to support our position. That's all we're really looking for. All right, so one more thing before I actually start showing examples of these breakout and takeout trades. The main thing that we want to be focused on for this to get the best results consistency. All right. So the main thing you want to focus on with using this method for entering a trade, depending on your strategy, is consistency. Now, so the reason I'm saying that is because getting in on a breakout or a takeout, you're kind of playing behind, what's creating the momentum and the price action and the volatility. You're kind of getting in sort of late. This is where most retail traders are going to be looking to get in, because those that move the markets, this is how they're painting the picture to sort of entice, retail traders and less experienced traders to get into a position, right? So I'm not going to go super into detail about, all of that for this video. So you want to make sure that you're consistent with this method. If you're using it, don't try to be too picky. Don't try to get fancy. Just, if you get the setup, take the setup. And, for this, of course, risk management is going to be very important. You want to because you're going to have to be comfortable with taking losses. You just want to make sure that your wins are bigger than your losses, right? So, all right. So now that we understand the basics and the foundation of the breakout and the takeout, so let's look at a couple examples so we can understand what we're talking about. So I'm just going to pick a random date here. I don't know. I'm just going to go with, I don't know. Let's go with June 8th. Let's go a little further back. I don't know what date is this. It doesn't matter. I don't even know what date this is. So yeah. So now you know for sure that I didn't plan this out. I have no idea how this is going to work. All right. So if we're looking for a breakout trade, what we need to look for is consolidation. So let's start with we're just going to look in the New York Stock Exchange hours, because we get more volatility, and with that we get more examples. All right. So let's talk about the breakout. Okay, so the breakout, what are we looking for? As I mentioned before, we're looking for consolidation. We're looking for that structure. Okay, so let's just, without even looking left, the understanding what kind of price action or what kind of structure we have from history. We see we have momentum coming in, right? These are some things that you want to take into consideration. What kind of price action do we have? We have momentum, so that's telling us that price is likely to continue trading higher, because we do have the momentum to support that. So right here we see we got a little bit of consolidation. Now, where do you want to place your order? So honestly, as soon as you start seeing that consolidation, you can go ahead and place your order at the break. Now, the way I like to take it personally is I like to be as aggressive as possible. So I could be looking at, let's say I'm seeing it at this candle here. I can be looking to take my entry. Let's say I'm looking at this candle. I can be looking to take my entry right in there, right? If I missed that one, we have this other one right here that gave us another opportunity to take a breakout. And I can go ahead and place my order right above the high of that candle, right? And then, as you can see, this one would have worked out. All right, so let's look for another one. Let's say we got that one worked out or whatever. And let's go ahead and try to find another area where we can take another breakout trade. Let's just look for another one. All right, so what we're looking for is we're looking for some consolidation. Technically, we got some consolidation right there. Now, personally, I like to have at least about 3 or 4 candles. This is something that at this point, I don't necessarily, when the market is live, I'm not counting and like, okay, that's 1 candle, 2 candles. No, I just something that I see now. I'm just sitting back, and then with experience, you'll be able to see these easier. All right. So now we got some consolidation right here. All right. So once again, with this consolidation, I'm looking to take it right up in there. Okay. Now, all right, so eventually you're going to want to stop taking breakout trades, because momentum can only take you so far. And just in simple terms, the momentum will only take you so far from where it started from. So the further away it gets, the less likely that a breakout trade or a breakout entry is going to work out for you, right? So if you're, trying to get in on a breakout super extended away, it's not going to, you're not going to have as much profit potential. And you're more likely to get stopped out either for a break even or a stop loss. So that's all that you really need to know about the breakout technique. It's really simple. It's a simple concept to understand. Just in a live market, it can be a little more difficult to see in action, you know, and things do kind of change. It's easy for me to go back and look at history and pull up an old chart and to point these little areas out. With experience and time, you'll be able to see these a little better in real time, right? So let's go ahead and talk about the takeout trade. And we're gonna use the same day. Well, actually, I'm gonna pick another day. I'm gonna pick another random day because this really isn't the best day to cover. All right, what day is this? This is May 24th. And let me clear all of this stuff off the screen. Let me go pick another date. Let's see. So May 24th. Let's just go with that. Let's go May 9th. I mean, or June 9th. Okay. As a matter of fact, let me pick out the time that I want. June 9th at 9:30. All right. 8 a.m. Eastern time. Okay, so this is a good one. This is a good one. All right, so let's make our little time that we're looking at a little bit easier to see. Go ahead and lock that in place. Okay. Now, so this is a good one. All right, so one more thing that I forgot to mention, you do want to focus on the trend, okay? So what is the trend? What's the overall trend so that you understand or so that you know what direction to trade in, okay? And we got to put our imagination hats on right now. I'm going to do this a little different in the next section of this. But, okay, let's say that we're looking at it from the open here. So let's see, we got this 9:30 candle right here. Let's just ignore all of this over here on the right side. And we can just do it kind of like that. So let's say we're looking at it like this. So if we're trying to determine the trend, we can see that we've been trading somewhat bullish overnight. Now, the further back you go, the more it's always helpful to look at the big picture. But, you know, just for this example, let's just go ahead and keep it simple. So right here we have a bullish trend. So let me go ahead and put a little trend line in there. All right, so we see we have a bullish trend. Okay, so all we got to do is we got to look for structure. So we're going to use the pre-market to look for our structure. And I'm going to just, okay, we got some resistance there. That's also some support. Okay, cool. So now we got a little bit of structure. And for the takeout, what we're going to be looking for is we're going to look for the price to trade back down into some structure, since we do have this bullish trend right here. So we're going to be looking to take a long position. All right, so we're just looking for price to pull back into that. And so now we have this red candle right there. So with this takeout trade or the takeout method, what we're looking for is a candle or a bar that's the opposite of the trend that we want to trade in. Okay, let me say that one more time. We're looking for a bar or a candle that's the opposite of the trend that we want to trade in. Okay, we see the trend here is bullish. We got a bullish trend, so we're looking to take a long position. So what we're looking for is a red candle, and if you can kind of barely see it because we got this red candle right there, so that looks good. So what we'll be looking to do, if we want to be aggressive, it did trade back down into support. There's a lot of wicks there. We should take that into consideration. It shows a lot of indecision. Like, we don't really, there is buying down here, but we also need follow through. We do need that momentum. I think I mentioned that earlier. We do need other traders to support our position. So, but if we want to be really aggressive, we can go ahead and place our entry order right there. And as a matter of fact, I'm going to use a different, we can stick with that. We're going to place our entry order right there. Okay, so let me go ahead and scroll this a little bit. All right, so now we're in the position, and that filled us, right away. So we would need some more buyers to come in here and, to be able to push price higher and, give us a good position right for this trade. All right, you can see the price did continue to push higher, and so forth and so on. So in the interest of time, if you want me to go into more detail about, targets and stop losses and, other ways to manage this method of entering a trade, just go ahead and leave that in the comment section below, and I'll make another video. I don't want to make this video super long, so we're only talking about the entry for this situation. All right. So for this example, you can see, to reiterate one more time, we got the pullback, we got the red bar here into support, which gives us our trigger to place our trade at the high of this bearish candle, right? This candle is the opposite of our trend, and we place our entry right there. And then you see, for this particular situation, we got a fill, okay? So you can just move it, and then you can see, you also, again, you got another opportunity right here. We got some pivot action right there that's giving us some structural support. Let me go ahead and put a little, where we at? Okay, right here. You can see we had, following this, we got a red candle that traded down. Okay, still the trend is bullish. We haven't, exited. We haven't left our bullish trend as of yet. We got the red candle trading down into support. We got a bounce. So once this red candle closes, we need that red candle to close. Once that red candle closes, then we can go ahead and we can place our order above the high of this red candle. Okay, so we don't necessarily need a big full candle that has a full body and small wicks, or just no wicks. We don't need these kind of bars right here. It can also be, as long as you got some red on there and we're trading back into support, that's what you want to look for. You want to make sure that you're trading back into support, right? Or for a long position, for a short position, you want to be trading into resistance, right? And you also want to make sure that that candle is the opposite of the trend that you're trading in. All right. So for a bullish position, if we're trying to take a long, we need to see that red candle, right? Depending on what your colors are, it needs to be a bearish candle, right? And for a short position, it needs to be a bullish candle. Okay. Maybe since this is such a good day, let me go ahead and look for a short setup. So you need the trend. So now you got the trend here. Okay. We can let me clear this other stuff off the screen. I cleared a little bit too much, but that's okay. You got some lower highs here. You got some lower lows, somewhat, not really. You got a lower low there. So just for illustration purposes, let's say I'm trying to take a short here. Once I got this lower high right there, I got a lower high right here. So let's say I'm looking for another, I done determined that, okay, this trend now looks bearish. So now I want to take a short. So if we're looking at it from this one right here, we can take a short below this candle, right? If we're looking at this one, we can take a short below this candle, because here is our structure. Our structure is right here, right? We got structure here. We have structure here. We also have some structure down in here. This is what we want to look for. Okay. Now, for less experienced traders, finding structure this way can be a little bit difficult. So this is why we can use indicators such as our moving averages. So for simplicity, we're going to go ahead and I'm going to put in I'm going to use my 200 SMA, and I'm also going to use my K-band, what I call the K-band, which is the mean of the Keltner channel. Okay. Now, using it with these indicators, what we can see, we can use the 200 indicator, the 200 SMA. We can use that for our long-term trend to get an understanding of what direction we want to trade in. So really simple, keep it really simple. Simple trades are usually the best trades. If we're trading above the 200 SMA, we're looking for a long position, right? If we're trading below the 200 SMA, we're looking for a short position, okay? Now for a shorter time frame, that's our long-term trend. For our short-term trend, we're going to use our, what I'm calling the K-band. As an alternative to this, you can use a 20 SMA or you can use a 20 EMA, whichever one fits your fancy. All right, so let's get back to using the takeout entry. Again, even though we're using these indicators, we can't use these indicators as indications of support and resistance. What we're really using these indicators for is trend determination, okay? But we still want to look at structure. You really want to look at structure when you're trying to use the breakout or the takeout method. All right, so we got structure here, just looking at this area right here, looking at history, we're looking to the left, where we got structure there. Again, we have structure here. We got structure here as well. We got structure right there, just looking at our price action. All right, so now that we have our indicators, we know that we want to take a long position because price is above both of our indicators. And we can see, we can use these indicators to make a determination that the trend is currently trading bullish. All right. So what do we need? We need to have a bar that's opposite of the current trend. The current trend is bullish. So we're looking for a bearish candle or a bearish bar, and we get that right here. We place our order above the high of that bearish candle, and that's where we take our entry. If we're looking for, so you know, if we're looking to take another one once it trades lower, we also are looking for, did this trade into support? Did this trade into structure? And yes, it did. So now we have our bearish candle opposite of the bullish trend, right? Which is right there. Again, we place our order at the high of that opposite candle, right? You can keep doing this. You know, you're looking for, do you get it right there? Absolutely you do. You get it. You get a good, decent response. So you can place an order right here above the high of this bearish candle, right? If you want, that's trading aggressively, but you also remember that we're also looking for pullback. So what you did not get here was the pullback. This will be more of a continuation type of trade, right? So now we need that pullback. So we're looking for the pullback. We get it. Your pullback. We start getting the pullback in here. We see we're making lower highs and lower lows. And you can honestly, if you want to be aggressive with it, you can start trailing the highs of these bearish candles until you get to right there, because you got this bearish candle that is trading down into support. You're getting a response from support, and you can put their order at the high of that, and you can just wait for it. Or you're also kind of getting some consolidation, which is also a method that you can use to place your order. So once you get this consolidation in here, you can put your order above this bullish candle there, or you can wait for that bearish candle and put your order there. Okay, so all of this is easy to see in hindsight. So the next part of what we're going to do is we're going to keep our indicators on the screen, right? And we're going to use replay mode to try to see this in real time. Okay, and let's go ahead and pick another random day. Let's go with we're gonna go with June 15th. I have no idea how this day played out, so let's see. All right, June 15th, there's our 9:30 candle. So we're gonna go ahead and use replay mode, put it right here at 9:30. Let's see the open, and I'm just gonna step this through. So what is the trend? The trend right now is bearish. Okay, if I'm looking at this pre-market, our current trend is bearish because we're below our 200 SMA and we're below our K band. So right now we're looking for shorts because the trend is bearish. Just keeping it really simple. Normally with this, you want to also keep in mind the bigger picture. So you want to look at some bigger time frames, like maybe the 30-minute at the smallest. And it really depends on how long you want to be in the trade. So you want to look at the 30-minute, maybe you want to look at the hourly, the 4 hours, the daily, the weekly, just to get an understanding of what the overall trend is. That will help you make better trading decisions on when to use this method and when not to use it, right? All right, so again, let's get back to this example, keeping it super simple. Right now we have, we're trading below the 200 SMA, we're trading below our K band. So once the market opens and we start trading, we want to look for a trade that we want to take a short. So what are we looking for? Let's go ahead and write out what we're looking for. Since we want to take a short, okay, because our trend is bearish, okay. So we're looking for a bull or a green candle, right? And we're going to enter at the low of that bull candle. Okay, so this is what we're looking for. I'm gonna put this down there. All right, so let's just go ahead and step this through. We haven't placed the order yet. We're just waiting for the market to open and give us what we're looking for. Oh, when we're looking for one more thing, I forgot. See, y'all gonna let me forget. Y'all don't let me forget. We also want to look at structure. Okay, so this is why preparation is also important, especially for this technique. So looking at what we can see from here, I'll go ahead and zoom just a little bit so we don't lose too much of what we're seeing. All right, let me get this out of the way. Put that up there. Let me put this up here. I'll put it up there. All right, so where's our structure? We have some structure right there. We got some support there. What else? We got a pivot here. We got some pivots in there. Pivots right in there. Pre-market, we can see another pivot. We've got some consolidation. Let's just put it right in there. It don't have to be perfect. It's best to look at these as ranges, not necessarily as just lines or specific points. Okay, so let's go ahead and let me see. We also got some structure up here. I mean, we even have some structure right in there. I mean, you can keep doing this. You'll find a lot of structure. Okay, you just keep doing this until you get tired of doing it. Yeah, we can put it right there. All right, so now we got our structure, we know our trend, and we know what we're looking for. We're looking for a bullish candle that we can take the low of. Okay, all right, let's go ahead and play this out. And we came in super quick. Oh no, so this is showing us momentum. All right, I'm not gonna get into a lot of detail about what that could mean, but let's see. So once we got that, now we also have some structure here from this pivot. Okay, go ahead and move it forward again if that stuff can get out the way. All right, so nope. One more thing that we're looking for, and you let me forget again. We're also looking for pullback. Okay, we're looking for pullback. We're looking for pullback into the structure. All right, so let's keep moving forward. All right, so now that technically is pullback, but we not at structure, so we still don't have a trade yet. All right, we still got pullback, but we don't have structure yet. Now, maybe there is structure on a bigger time frame, or if we keep scrolling left, you can probably see structure. But just for this illustration, let's just, matter of fact, I'll go back and look and see if I can find some structure in here. So we do have structure right there. I'll move it down just a smidget. And we also have structure here. Okay, so let's run that forward and let's see what that gave us. Okay, so that we bounced off of that structure, and as you can see, we don't really have structure in between that. So just from looking at this small picture here. All right, so let's just keep looking. Let's keep looking until we find it. Okay, so then we did trade back into structure. However, we broke through that structure. So you do want to kind of take that into consideration as well. We closed above that structure. So we did break through this structure, but we also have some structure here. So the body of these candles also make a difference, and we are lining up with the Keltner channel. So we can also, in the moment, we can also look at that as structure. And we can mark that off, but we also do have structure right there. So technically, we can go ahead and put an order down there to take a short at the low of this opposite candle. Okay. All right, so let's go ahead and step that forward. I'm gonna have to move this down or into another area. Okay, we didn't get filled yet, so we continue trading higher. We got more pullback and we got a nice reaction to that structure, so we can go ahead and place our order there. Step that further. Oh, and it gave us a better entry. Actually, we still got some reaction to the structure. We still trading into the structure, got the pullback into the structure. All right, so we can. All right, so this one we got triggered into a position, likely that we got stopped out, because for this kind of trade, you don't necessarily, or for this technique, you don't necessarily want to take on a whole lot of risk. For this technique, you want this is a play on momentum or a play on continuation, and that's not what we got here. So we got basically a trap type of price action. Now there's some other things that you can look into, and I will highly advise is doing a lot of studying on this to understand, when is best to take this kind of trade and when it's not. But when you're starting out with this, you want to take as many as you possibly can, sticking to these rules right here. Okay. All right, so that's that one. Let's go ahead and keep stepping this forward to see what else we can get. And see, so there's a good chance that you could have, and this is where how you take your this is how you set your strategy. This plays into how you set your strategy up. There's a lot more that kind of goes into this. Like I said, if you want me to go into more details about taking this kind of trade, this is just the basics of it. So if you want more details about the takeout and the breakout method, just go ahead and leave that in the comment section below. But you can see here, if you had your stop loss too tight, you would have got stopped out before it actually gave you a move that you wanted. And see, we traded right back down, and there we go. Okay, so we're just gonna, now we don't necessarily have, at this point, we don't necessarily have a setup for a takeout trade, but we are starting to set up for a breakout. This one, however, is not as good of a setup as we would like, simply because really you got this in the way. You have this price action here. This is kind of in the way. If you take a breakout, you can expect to see some buyers sitting down there, and you're not likely to get a lot of follow through. So it can, you can get follow through. Matter of fact, let's just play it and let's see what happens. So before we do that, what are we looking for a breakout? So of course we're looking for that structure as well. We're looking for support and resistance. Let's go ahead and move that out the way. All right, so for a breakout, we're looking for structure, right? So we're looking for that structure right there, which is consolidation. And this is recent or current consolidation, not historical consolidation. This is consolidation that we're getting right now. This consolidation back here doesn't even matter. For this breakout, we're looking for this, okay? And you're also looking for the high and the low, which is the support and resistance of the consolidation. All right, of the range. Okay. All right, so let me go ahead and kind of draw this out. All right, so you have, here's your range here. I will look for where I get the most points, the most touches. So now we have our consolidation there. We still don't have any takeout setups. We're just looking at this as a possible potential breakout. And if we do get the breakout, what we're looking for is we're looking to take the low, the other side of this low here. All right, so you could actually took it there and you would have been stuck in a position. But like I said before, just a quick disclaimer, this is not the best setup just because of this range, the broader range that we traded in from the open. All right, so let's keep moving forward. So we got some wild price action and it finally broke out. Let's see if we get continuation. So your order would have been like down in there somewhere to take a short. And we get a little bit of follow through and we are continuing to follow through. And then we get more consolidation and we're just playing around, chopping around, not really moving anywhere. There's a lot of traps in this kind of price action. So this is why consistency is very important. And this is also why risk management is very important because you will lose a lot. All right, so I'm gonna go ahead and wrap this video up. I don't want to make this video super long. I feel like this video is already long enough. I could honestly talk about this for hours and go over all kind of different scenarios and situations, and I can go into more details. But this video was just to go over the basics, to get a basic understanding of the breakout and the takeout method of entering into a position. So one quick tip that I will give about this is you want to make sure that you have a good risk to reward ratio, because you will take on a lot of losses with this sort of technique. But if your winners are bigger than your losses, then the numbers will work out in your favor. All right, so with all that being said, if you do want me to go into more details about how to develop a strategy around this, or when it's best to use which technique, and all of that good stuff, go ahead and leave that in the comment section below. And I'm gonna stop talking now, and I'll see y'all on the next one. Trade it easy.